The product that we choose for our managerial accounting assignment is chocolate chip cookies. It is quite famous nowadays and has become a favorite cookies flavor in Malaysia. It is brown, full of chocolate chip and crunchy. We decided to interview a local small business in Johor Bahru that produce and sell chocolate chip cookies. The name of the founder is Anur Afifah binti Bani Amin, a 24 years old woman. This business has been running for almost 4 years since 2017 until now. Ms. Nur Afifah has been in the bakery field since she was 16 years old and decided to continue her study in Diploma in Pastry Art in Universiti Teknologi Mara, UiTM. In order to produce chocolate chip cookies, Ms. Anur Afifah decided to hire 2 workers, including her sister, to complete the task of producing enough chocolate chip cookies for the order that they receive. Each worker will be paid RM200 per month. In this context, there are direct labor that exists in this small business, which is the worker who do the bake part and the worker that does the packaging part. Both of them are fixed direct labor.
She also has her own Instagram for her small business, which is at Buy Papes. She also does some promotions such as giving RM5 discount if the customer buy more than 2 bottles of chocolate chip cookies. The current selling price for the chocolate chip cookie is RM30 per container. There are 50 pieces of chocolate chip in each container. Every month, Ms. Anur Afifah's small business managed to sell estimated 50 containers of chocolate chip cookies. According to the founder of these chocolate chip cookies, Ms. Anur Afifah, the selling price was determined by the price of the raw materials needed to make the cookies and the market price. This means that in the market, there are other businesses who sell the same product around RM30 range, including all of the cost.
To produce the chocolate chip cookies, there are 6 ingredients that needed to make sure that the deliciousness of the cookies. For instance, salted butter, eggs, castor sugar, wheat flour, chocolate chip and brown sugar. For the chocolate chips cookies packaging, Ms. Anur Afifah uses container that can fill 50 pieces of cookies in one container. She also puts sticker on the cookies container so that the packaging will look more interesting and scrumptious. The container, sticker and sellotape are under indirect material. Let's talk about manufacturing overhead. Manufacturing overhead can be defined as the costs that cannot be traced to the product easily, including the indirect materials such as machine repairs and service, utilities expenses and depreciation expenses.
You call me on the telephone, you feel so far away. You tell me to come over, there's some games you wanna play. I'm walking to your house, nobody's home, just me and you and me alone. We're just playing hide and seek, it's getting hard to breathe under the sheets with you. I don't wanna play no games, I'm tired of always chasing after you. I don't give a fuck about you anyways. Whoever said I give a shit about you? You never share your toys or communicate. I guess I'm just a playdate to you.
Classification of costs. We have 2 types of classification of costs. The first one is product. The second one is period. Under product, we have direct materials, which is salted butter, wheat flour, castor sugar, brown sugar, chocolate chip, and eggs. Next is manufacturing overhead. We have machine repairs and service, depreciation expenses, utilities expenses, and baking paper. Direct labor. We have wages of 2 workers. For period, we have selling expenses, which is packaging and bubble wrap. Administrative expenses for stationery expenses. Next is traceability and cost behavior. Under traceability, we have direct, which is salted butter, wheat flour, castor sugar, brown sugar, chocolate chip, and eggs. Next is indirect, which is machine repairs and service, depreciation expenses, utilities expenses, packaging, bubble wrap, and baking paper. For cost behavior, we have fixed, which is depreciation expenses, stationery expenses. Next, we have variable, salted butter, wheat flour, castor sugar, brown sugar, chocolate chip, eggs, machine repairs and expenses, utilities expenses, wages expenses, packaging, bubble wrap, and baking paper. Miss Anur Afifah Business Production can only afford 200 pieces of chocolate chip cookies that can produce 4 containers per round. The production can take at least 3 hours to be done per round. In her small business, she only did 13 rounds in a month and it get produced almost 52 containers. Therefore, all of the calculation goes based on the information that we got from Miss Anur Afifah during the interview. Miss Anur Afifah said there is no delivery charge for all of the materials purchased, so we can state that there is no front-end in this business. Calculation on cost for direct material. Salted butter. The price per unit will be multiplied with the round. We will get Rm 85 ringgit and 15 cents. For wheat flour, we will get 9 ringgit and 36 cents. For brown sugar, we will get 16 ringgit and 12 cents. For castor sugar, we will get 6 ringgit and 21 cents. For chocolate chip, 112 ringgit 32 cents. And eggs, we will get 7 ringgit and 80 cents. So the total is 236 ringgit and 96 cents. Calculation on cost for direct labor. Miss Anur Afifah hired 2 workers and she paid Rm 200 per person in a month. So the total for direct labor is 400.
Here is the calculation for manufacturing overhead. In this manufacturing overhead, we have variable manufacturing overhead and fixed manufacturing overhead. Items listed in variable manufacturing overhead are machine repair and service, brown sugar, which both of the calculation has totaled up for Rm 90 ringgit. Next is item listed under fixed manufacturing overhead, such as utilities expense, depreciation expense, mixer, depreciation expense for oven, depreciation expense for baking and pan, and the total cost for fixed manufacturing overhead is Rm 462 ringgit. Next right up is calculation for period cost. For period cost, we will have variable selling and administrative expense, fixed selling and administrative expense. For items listed under variable selling and administrative expense are for the packaging such as containers, stickers, sellotape, and bubble wrap. The total cost for variable selling and administrative expense is Rm 145 ringgit and 80 cents. An item listed under fixed selling and administrative expense is stationery expense for Rm 5. The total calculation for variable selling and administrative expense plus fixed selling and administrative expense are 150 ringgit and 80 cents.
Next, we will be moving to new selling price based on markup. First, we calculate the total cost, which is we got 1,339 ringgit 76 cents, and we divide to 50 containers per 30 days, and we got cost per unit 36 ringgit and 79 cents. Based on the calculation above, the new selling price is 30 ringgit and 11 cents. In our opinion, Miss Anur Afifah should put a new selling price of 31 ringgit per container to make the transaction easier. Next, we move on to new selling price based on contribution margin. First, we calculate the contribution margin, and we got the contribution margin total to 427 ringgit and 30 cents,
and we calculate the contribution margin ratio and we got 28.47%. The above shows that Miss Anur Afifah have 28.47% sales to cover the fixed expenses. We think that her business should have a contribution margin of 30% just to make sure that her business has enough resources to cover up the fixed expenses. Therefore, we calculate the new contribution margin and we total up to the new selling price and we got the new selling price 30 ringgit and 64 cent. For this method, we decided to round the new selling price to 31 ringgit in order to make the transaction easier. Break-even and sales volume based on price. We assume that one unit equal to one container. Below are the calculations of the break-even sales in units and ringgit Malaysia and the sales volume based on the current selling price. First, we calculate the variable cost per unit or per container and the variable cost per unit is equal to 17 ringgit and 46 cent. Next, unit contribution margin is equal to 1 ringgit 72 cent. For the fixed cost per unit is equal to 9 ringgit and 24 cents. Hence, the break-even sales in units is equal to 269 units. Therefore, the break-even sales in RM is 7,700. From our standpoint, the owner should get 2,000 per period as the owner does not have any dependents for her to pay. To achieve the targeted profit, Ms. Anur Afifah should sell around 1,432 containers of chocolate chips per month to get a profit of 2,000, while the sales in RM the owner should achieve is 42,960. Next, we move on to break-even and sales volume based on new selling price. The calculation of break-even sales in units and RM will be based on the new selling price that we had determined, which is 35 ringgit, while the other costs will remain unchanged. Unit contribution margin is 17 ringgit and 54 cents. Hence, the break-even sales based on units for the new selling price 35 ringgit is equal to 27 units, while the break-even sales based on ringgit Malaysia is 945 ringgit. For the targeted profit for the new selling price is 2,000 per period. To gain the targeted profit, Ms. Anur Afifah should sell 141 units containers of chocolate chips cookies per month. Though the sales in ringgit Malaysia, Ms. Anur Afifah should achieve is 4,935 ringgit.
Here is an income statement for absorption and variable costing. The amount of net profit and absorption is the same amount of net profit income in variable with the amount of 160 and 24 cents. All the finished product will be sold at the current period, so there will be no beginning and ending inventory. Both income statements have the same balance as there is no either beginning or ending inventory of chocolate chip cookies. The projected financial statement for 3 months. First, we have sales budget. The owner increased her production by 5 rounds in every month as she getting adapt to the business mode and improve her strength to complete more rounds with the ability of herself. All chocolate chip cookies will be sold at the current month. Here is the direct material budget for December with RM 268 ringgit and 92 cents, followed by January RM 358 ringgit and 56 cents, and lastly February for 448 and 19 cents. All the direct material will be acquired at the beginning of the period and will be fully used in the same period. Thus, there is no inventory needed for the direct materials. Next, right up is direct labor budget. For months December, January, and February, there is no changes or increasement in the direct labor budget because Ms. Anur Afifah do not have any plan or intention to hire more workers in the following months, regardless the increasement of the production. It is still manageable for her to keep up with all hard works. Next is manufacturing overhead budget. The total manufacturing overhead in the month December is 597 ringgit, January 642 ringgit, and lastly February 687 ringgit. Second is the variable selling and administrative expense. Total variable selling and administrative expense for the month December is 270 ringgit and 92 cents. For the month January, 291 ringgit and 60 cents. And the last month February is 364 ringgit and 50 cents. Based on the following calculations, the cash budget for the month December is 6,426 ringgit 94 cents, and for the month January 7,951 ringgit and 78 cents, and lastly for the month February 13,384 ringgit and 47 cents. The cost of goods manufactured that we got from this production is 1,265 ringgit and 92 cents in the month December, and in January 1,400 ringgit and 56 cents, and the next month February is 1,535 ringgit and 19 cents. The following below is budgeted income statement for 3 months ended in February 2021. In December, we got net profit for 701 ringgit and 60 cents, and for the month January, 1,302 ringgit and 84 cents, and the last month February is 1,845 ringgit and 39 cents. In conclusion, after finishing this project, we got a clearer view of how managerial accounting can be applied to reality and some of the functions of managerial accounting in business. For instance, we use managerial accounting to calculate the cost to produce a product, to determine the selling price, to calculate the break-even sales, and so forth. Through the assignment, we can see that the step that we have gone through to make sure that our project is organized and well prepared. It is starting from interviewing the business we choose. Second is gathering all the information that we needed in the business. And lastly, we calculate the calculation for cost of the production. In a nutshell, managerial accounting makes the process of decision making for a business become much more easier. Managerial accounting is indeed useful to apply in a business so that the business can develop goals and to translate this objective into an action.